this chapter, we're going to explore some alternative ways to think about how to allocate manufacturing overhead. Let's look at an example. Bad Decisions manufactures basic and deluxe boats and has given us some production data. During the period, the firm only made 10 of the fancier deluxe boats, and it made 30 of the simpler basic boats. We can see the costs for the direct materials and direct labor and manufacturing overhead that went into each kind of boat and the total for the period. But these costs are not the same from an accounting point of view. Remember that the direct materials and direct labor can be traced. That means we have good paperwork that tells us how much materials and how much labor went into each kind of boat. But the manufacturing overhead has to be allocated because there's no good way to trace it. This firm uses a predetermined overhead allocation rate based on direct labor dollars because that's what makes sense to the firm. Then we can add the direct materials, direct labor, and allocated manufacturing overhead that went into the deluxe boats to get the total cost of the deluxe boats for the period. And we can divide by the number of deluxe boats that were made to get the cost per unit for a deluxe boat. We can do the same thing for the basic boats by adding their direct materials and direct labor and allocated manufacturing overhead to get the total for the basic boats, and then dividing that total by the number of basic boats made during the period to get the cost per basic boat. The boss thinks that maybe the firm should stop making the deluxe boats because they're too expensive. Let's see what happens to the firm if the boss carries out this plan. Without the deluxe boats, the firm will only be making 30 basic boats during the period. So the firm will only have the direct materials for the 30 basic boats. And it will only have the direct labor for the 30 basic boats. But what about the manufacturing overhead? The answer to that question depends on the structure of the firm. If the deluxe boats were made in a separate factory, then the firm could close down the factory and the overhead that was allocated to the deluxe boats would go away. But in this firm, all of the basic and deluxe boats are made in one factory with one set of equipment and one plant manager and one insurance policy and one utility bill. So none of the manufacturing overhead would be eliminated just because the firm stopped making deluxe boats. Now we can add the direct materials, direct labor, and manufacturing overhead to make the basic boats during the period, and divide by the 30 boats that were made to get the cost per boat. And the boss is horrified to see that instead of each boat costing a little less than $7,000, now each basic boat costs $9,800. So why did the cost per basic boat increase? Think about it for a moment. Well, the answer can't be A, because overhead costs didn't increase. And the answer can't be B, because the direct materials and direct labor costs for the basic boats didn't increase. And it can't be D, because the cost per basic boats definitely did go up. The answer must be that the basic boats now had to cover the overhead costs that were previously covered by the deluxe boats. And the moral of the story is that decisions are only as good as the information and the skills used to make them. In addition, you can't control costs that you can't see. One of our jobs as managerial accountants is to make costs visible so that smart managers can decide what to do about them. This is especially true for manufacturing overhead, which is hard to see because it can't be traced. This isn't much of a problem if a firm only makes one product in one size, because regardless of the overhead allocation method used, all of the units consume overhead in the same way. But if a firm makes several different products, then the issue of the overhead allocation method becomes extremely important, because different products will absorb manufacturing overhead in different ways. So the overhead allocation method that a firm chooses may affect the firm's understanding of how much it costs to make each product. Let's look at an example. XYZ uses a single plant-wide overhead allocation rate based on direct labor dollars to allocate overhead to its two products. The firm knows how many units of each product it made, and it knows how much direct material went into each product, and how much direct labor, because these costs can be traced. But what about manufacturing overhead? That's got to be allocated. Before the period ever started, the firm computed its predetermined overhead rate as the total expected amount of manufacturing overhead divided by the total expected labor dollars for the period. And it got a number, 0.90, which means that the firm should allocate 90 cents of manufacturing overhead to either product for each labor dollar that the product uses. The effect of this formula is that it will automatically allocate more manufacturing overhead to whichever product uses more labor dollars. If the firm doesn't think that makes sense, it should pick a different formula. You could also think of this allocation rate as an instruction to assign 90% of a product's direct labor costs as allocated overhead. Based on this allocation rate of 90 cents per labor dollar, we can take the total amount of labor dollars for the basic units and multiply it by 90 cents per labor dollar to get the total overhead allocated to the basic units. Then we can add the total materials, labor, and allocated overhead for the basic units to get the total cost, and divide by the total number of units to get the cost per unit. We can do the same thing for the deluxe units by multiplying the total labor dollars times the 90 cent per labor dollar allocation rate to get the total amount of overhead allocated to the deluxe units, and add the direct materials, direct labor, and allocated overhead to get the total cost for the deluxe units, and divide by the total number of deluxe units to get the cost per deluxe unit. Based on this model, the firm would believe that each basic unit cost a little over $48 to make, and each deluxe unit cost $105.60 to make. But are those good numbers? That's an important question because the firm is going to base its pricing strategy and its marketing plan on its understanding of how much each of these products. The firm makes its products in two departments, and it knows that what goes on in the assembly department is very different from what goes on in the packaging department. So the firm is considering a switch to departmental rates to allocate its overhead. That means that the firm would separate its total overhead into the part that belongs to the assembly department and the part that belongs to the packaging department, and compute a different predetermined overhead rate for each department. And the allocation rate for each department would be based on that department's operating characteristics. In this example, XYZ knows that its assembly department is machine paste, whereas its packaging department is labor paste. So the firm takes its total overhead and splits it into the part that belongs to the assembly department and the part that belongs to the packaging department. If you're an accounting major, you'll learn some techniques for splitting manufacturing overhead into departments when you take cost accounting. Since the assembly department is machine-paced, the firm plans to use machine hours to allocate the overhead for this department. So XYZ either measures or estimates the number of machine hours that it expects to use for basic units in the assembly department and the number of machine hours that it expects to use for the deluxe units in the assembly department. Note that the deluxe units use a lot more machine hours than the basic units do in the assembly department. That's not surprising because deluxe units tend to be more complicated than basic units. Now, XYZ can take this information and add the number of machine hours that the basic units use in assembly plus the number of machine hours that the deluxe units use in assembly to get the total number of machine hours for the assembly department. Then the firm can compute the predetermined overhead rate for the assembly department. As the total manufacturing overhead in assembly divided by the total machine hours in assembly. XYZ already figured out how much of its total overhead belongs to the assembly department. And we can divide that amount by the total number of machine hours in the assembly department to get the allocation rate for assembly department overhead. This rate tells us that the firm should assign $45 of assembly department overhead to either product for each machine hour that the product spends in the assembly department. Now, let's look at how to allocate the overhead that belongs to the packaging department. XYZ believes that this department is labor-paced. So the firm decided to allocate packaging department overhead on the basis of labor dollars in the packaging department. So the firm either estimated or traced how many labor dollars in the packaging department went to the basic units and how much went to the deluxe units. Now the firm can add the number of direct labor dollars used to package basic units plus the number of direct labor dollars used to package deluxe units to get the total number of direct labor dollars used in the packaging department. Now the firm is ready to compute a predetermined overhead rate for the packaging department by dividing the total manufacturing overhead in the packaging department by the total number of labor dollars in the packaging department. The firm already determined how much manufacturing overhead belonged to the packaging department. And we just figured out how many labor dollars were used in the packaging department. When we divide that out, we find that XYZ should assign 60 cents of packaging department overhead to either product for each direct labor dollar that the product uses in the packaging department. XYZ can now use this information to determine the cost per unit for its basic product and its deluxe product. In the assembly department, we know that the allocation rate was $45 per machine hour. We can multiply that by the number of machine hours used by the basic units to get the total assembly department overhead that belongs to the basic units. We can do the same thing for the deluxe units by multiplying the $45 per machine hour allocation rate for assembly times the number of machine hours that the deluxe units used in the assembly department. Notice that the deluxe units use a lot more machine hours in the assembly department than the basic units do. So the deluxe units are assigned more of the assembly department overhead because they consume more of the assembly department's overhead resources. For the packaging department, we multiply the 60 cent per labor dollar overhead allocation rate times the number of labor dollars that the basic units use in the packaging department to get the total amount of packaging department overhead that belongs to the basic units. We can do the same thing for the deluxe units by multiplying the 60 cent per labor dollar allocation rate times the number of labor dollars that are used by the deluxe units in the packaging department. Notice that the basic units use a lot more labor dollars in the packaging department than the deluxe units do. This may partially be caused by the fact that the firm makes a lot more basic units. But it also might occur if the basic units are packed several to a box, so it takes more time and skill to get them packed, whereas the deluxe units might be packed individually, which could actually be easier. Now we can add the direct materials and the direct labor for the basic units to their share of the overhead in the assembly department and in the packaging department to get the total cost for the basic units, and divide by the total number of basic units produced during the period to get the cost per unit. We can do the same thing for the deluxe units by adding the direct materials and the direct labor that went into those units to the assembly department overhead and the packaging department overhead that was allocated to those units to get the total cost to manufacture the deluxe units during the period. Then we can divide by the number of deluxe units that were produced to get the cost per deluxe unit for the period. If the firm decides to go with departmental overhead allocation rates, it would understand the basic units to cost a little over $41 per unit to produce, whereas it would understand the deluxe units to cost over $123 each to produce. When we compare how much XYZ would think it costs to make a basic unit versus a deluxe unit, we can see that the answer would be different depending on whether the firm chooses a single plant-wide allocation rate or departmental rates for its manufacturing overhead. That makes sense because the two methods to allocate overhead tell different stories. The single plant-wide rate says that both products consume manufacturing overhead resources throughout the firm the same way that they consume labor dollars. By contrast, the departmental rates say that both units consume assembly department resources in proportion to how many machine hours they use, whereas the two products consume packaging department resources in proportion to how many labor dollars they use. So the question is, which costs are correct? Do the basic units cost $48 each or $41 each? And do the deluxe units cost $105.60 each, or do they cost a little more than $123 each? And the answer to that question depends on managers' understanding of how their firm actually operates. So let's compare the two methods. Plant-wide allocation puts all overhead costs into a single pool and uses one predetermined overhead rate to allocate those costs to various products. Therefore, using a single plant-wide rate works best for firms that either make only one product in one size, or for firms that believe that their various products consume overhead resources in similar ways. Departmental overhead allocation uses a separate pool and computes a separate predetermined overhead rate for each department, so that the total overhead allocated to a particular product is the sum of its overhead from each department. Naturally, this involves more record keeping and more math, but it may give firms a better sense of how much their various products are actually costing them if the firm believes that its products use departmental overhead resources in different ways. Based on our discussion of plant-wide versus departmental overhead allocation rates, which of these statements is false? Take a minute to think about it. The false statement can't be A, because a single plant-wide rate is simpler than using departmental rates to allocate overhead costs. And the false statement can't be B, because departmental rates do include more details about how various products consume overhead resources than a single plant-wide rate does. And the false statement can't be C, because allocation always focuses on indirect costs, costs that can't be traced. So the false statement must be D, because predetermined rates are always computed before the period starts, so they can't be based on actual costs. This is the end of this section.